Well, thank you so much for joining us. Now, the ASI is currently down by 0.18%, now pulled down by the financial sector. Let's get more on the picture from the Nigerian trading floor right now with Babajide Solanke, the analyst, research and strategy at FSGH Merchant Bank. Thank you so much for joining us, Babajide. And
Thank
the
you,
markets
Hoye.
gained about 0.06% yesterday, although the gain was marginal. Now, what's the picture like right now?
Thank you, Hoye, for having me. The picture right now is that the market is just shed about 0.17%. There's low activity in the market right now. As you know, we have an August visitor in the city. I heard the president is around. Maybe people are caught up in traffic. But as the market progresses, we hope that we will see increased activities in the market. But right now, market is down.
Well, a number of indices declined after trading yesterday. I've noticed the absence of any bank in the top traders list, well, despite the volume traded. Now, how is investor sentiment like for the financials?
For the financial, the sentiments are still here or there. As you know, some major financial institutions, that's the banks, are still expecting their result like First Bank, Stanbic IBTC, UBA, and FCMB. But again, I quickly need to add that these banks, they adopted the old cost structure as wanted by the Central Bank of Nigeria, and by implication, the subsidiaries of these companies need to adopt the IFRS standard as well. So we understand that's what is delaying the result. And going forward, people will have, some agitations concerning the earnings of banks, given the current yields on fixed income securities and the need for banks to expand the balance sheet.
Now, the consumer sector, traded over 51 million naira in value yesterday. Now, do you think the numbers seen from PZ Cousins might be responsible for the activity seen in that space, especially as the likes of Nestle and Unilever are among top gainers at the moment?
Yeah, the consumer sectors, the fast-moving consumer goods, I rather call it, continue to see increased activities because most of these stocks are defensive stocks, which means that no matter how the economic cycle goes, these stocks will continue to have some level of returns for investors. Of course, as you said, maybe Unilever and Nestle. For PZ, I think PZ price is over-bloated. I don't think what is driving PZ Bank, the current valuation is correct. I believe that we should expect some sharp corrections in the share of that prices. Maybe Nestle, maybe Cadbury, maybe Unilever for PZ. Well, as I said, the result came in, but I don't think that's the reason why the fast-moving consumer goods sector saw that such increased activities.
Oh, well, it's been, a mixed trend for the consumer space, as I mentioned earlier. We saw Dangote's full-year earnings with a marginal drop of 0.3% in the revenue. Now, what's investor sentiment towards that stock today, as we see it on the losers chart?
For Dangote Sugar, I think there's a misconception about what the earning potential of that company is. As you rightly said, there was a marginal drop in its revenue, and that's understandable because the price of sugar, which is a major raw material, which company imports, saw very high increases in 2012. But again, going forward, I expect the company's revenue to shoot up because the price of sugar has fell substantially in the international market, and again, because of the acquisition of Savannah Sugar and the delay in Savannah Sugar contributed to the company's earnings due to the problem the company had with the host community in Adamawa State has been resolved. So going forward, we should see some expectation of improved revenue from Dangote Sugar. Also, you will see that the company again had about a 7% increase in its dividend per share compared with the comparative period of 2011. So I think there's a misconception. I think Dangote Sugar for me remains a buy. And going forward, I think people will begin to factor the fact that this company's earnings potential into the future is robust.
All right, now what is the market's expectation for the financials, especially as we're yet to see results from First Bank, Union Bank, and FCMB?
Yeah, the banking stocks, of course, capitalization makes them an important consideration. As I said, the banking stock, was expect the result of some of the majors like First Bank. And as I said earlier, the adoption of the old cost structure as proposed by the central bank means that the subsidiaries, so the subsidiaries account which has to adopt the IFRS standard is delaying the result. And that has not helped because the market doesn't like vacuum. This information is not widespread. The market likes to be informed about what's going on. And most of the share price that you see in the banking space, as you know, before I go on, as you know, the two components to earnings, the two components to the returns you can have on a stock, which is capital appreciation and dividend yield. The capital you see substantial capital appreciation in these share prices, and the dividend yield of course, which is what will drive the stock price, is not much, given the dividend yield of about 4 to 5% that we're expecting. So the delay in the release of this result, as I said earlier on, and again, in addition to the earnings potential of these companies in 2013, given the need for them to expand risk assets in the face of inadequate infrastructure and all those factors that have not been able to make them to increase their risk assets, kind of slows down investors' interest in these particular stocks.
Well, just there was something you hinted earlier when we were talking about, Dangote stocks, and then you did say that in spite of us being in the earnings season, I mean, stock like Dangote, you have people still practically selling. What's that about?
As I said earlier on, I made mention about the fact that there was a disappointing, there was a disappointment from the company in terms of its revenue, which you said actually fell, and most people believe that going forward that maybe the company will not be able to have much in terms of growth in its revenue. And of course, you can see that there was a substantial growth, about 45% growth in PBT, 41% growth in PAT, and cost-cutting in measure, how long can a company take if the company doesn't grow revenue? And as I mentioned earlier on, this is a misconception because the price of sugar, which is a major raw material, has fell in the national market. We expect it to continue to fall, given current forecast from the Food and Agriculture Organization and other institutions. And as I said earlier on, the company still remains a buy for me, given the prospect and a near monopoly in that particular space.
Well, do you think, inflation might be affecting the market at this point? I mean, we had inflation down by 8.6% year on year in March. How is the market reacting to this?
Well, the reaction to inflation in the market is not well spelled out, and on a historical basis, there's no real linkage between inflationary expectation, current inflation, and inflationary expectations on market activities. But as you know, inflation expectations into the future in Nigeria remains a single-digit region, and of course that portends well for the equities quoted on the floor of the exchange, because at expectation of low inflation, that means that the return attributable to shareholders or to investors will be an uptick. And well, as I said, there's no historical evidence to suggest that there's a relationship between this, inflation and inflationary expectations and equity market activities in Nigeria.
Moving back to the overall equities market, what is your outlook going forward?
Sorry, can you take that again? I didn't get that.
Moving back rather to the overall equities market, what is your outlook for the markets going forward?
Going forward, I expect the market to continue to have this intermittent appreciation and depreciation. It is good for the market. People need to come in at some point in time at good prices, and people need to be able to have upside potential in their investment. Going forward, I expect that the market will have there are opportunities, if we can put it that way, in the market, but a significant downside risk rather, to the market is the potential for sharp withdrawals by foreign portfolio investors, given the current oil production, which is below optimal in Nigeria, and given the falling prices of oil in the international market.